Good afternoon and welcome to our weekly Sonar Market Insights webinar. Looks like we have everyone signed on here, so we're going to go ahead and get started. Again, this is not a 101 type webinar. We're going to go over more what's happened in the market over the past week, which indices you can use to best understand what is happening and when it's happening, and a few housekeeping things before we get started. As always, the Q&A section on your banner, if you have any questions as we go through regarding how you can view the data, what it means, please feel free to ask. We'll try to save those questions until the very end to answer. And also, for those of you that are attending the ION Expo in Long Beach, California next week, our Sonar team will be there. So if you're going, please stop by and say hello to us. We will have a booth out there and we would love to meet you and say hello. But without further ado, I will let Zach Strickland start us off and preparing us for our first Sonar hurricane season, and the first time we've been able to use Sonar to see what's happening in one of these crazy natural disaster times of the season. So go ahead, Zach, get us going.
All right. So thank you, Brad, for that. Hurricanes, pretty terrible things, but transportation folk know that they are insanely disruptive to the transportation freight markets. Hence the spot market goes haywire, and the rest of the country is also left vulnerable as carriers kind of they're contracted out to cover FEMA loads, and various other places like Home Depot and other companies like that kind of have all this outreach as they kind of rush in to help the victims of these natural disasters. Last year we had Harvey, which was devastating to the city of Houston. Huge population center there. You had a large amount of disruption. Irma came in a little bit later. Large amount of disruption that happened later and then just like in the near term. And that's what we're kind of going to go through today. A lot of this stuff should be pretty commonsensical. So I don't really want to harp on what we probably already know or expect. But I do want to kind of outline some spots in Sonar that give you an idea of what carriers are doing and what some of these markets are doing in reaction to the hurricane. So that being said, let's dig right into it. What I've got pulled up here is the inbound tender market share weekly change. And what this is telling us is the markets that have seen the sharpest decreases will be in white, and the sharpest increases, such as the one over here in Joliet, will be in blue. So Joliet is seeing a significant amount of inbound kind of volume in relation to the rest of the country. So it's not an absolute volume measurement. That would be the outbound tender volume index. That would be more closely tied to absolute volume. Market share is going to give you basically the load volume balance in the country. So as a percentage, and it'll be a percent of 100. It's like outbound tender volume is a true index where it can increase in total and decrease in total. Inbound and outbound tender market share will stay just a piece of the pie. I think the analogy I've used in the past is you only have the exact same 14-inch pizza that you had every single day. Outbound tender volume, inbound tender volume, that pizza can be 16 inches one day and 12 inches the next. This one, you'll be able to change just the amount of the size of the slice you have. So I like using this one because it gives me an idea of kind of freight balance in the country and where loads are actually moving in relation to the rest of the country. Outbound volume, where it helps you kind of know overall, like where everything, like if there's increased volume overall. This one gives you kind of, well, how much of it is in what market instead of how much of it is in the bigger picture. And you can see here, right where you'd expect it to see, Greensboro market in North Carolina has had a sharp decrease in inbound tender market share. And I know that because it says it right here. It's dropped 0.125%, which you don't really have to know the number to make any sense of it. I'm going to show you the chart here in a minute. Actually, I'll go ahead and show you the chart just to show you what kind of huge drop this is. So you can see this market itself really pretty stable. Inbound tender market share hovers. Let's just draw an average line on here. This is one of the tools that you can use in SONAR to kind of give you an idea if you're trying to really get a little bit more detailed or analytical with the data, as I normally do. Looks like I've already got one on there. So I drew an average line. I'm going to go ahead and take that one off and just draw it again. So what I did was I clicked up here in the select tools, and you see this list of tools on the left-hand side of your screen. I selected average line, and basically what this does is you pick a starting point and an end point, and it will give you the average value between those 2 points. It's pretty useful when trying to figure out, well, what's a normal way of looking at this? What's normal for this market? And you can see normal for this market since July 1st is about 0.7754% of the total inbound loads in the country, or it's actually just total loads in the country go to Greensboro, North Carolina. We've got it labeled incorrectly.
So that's less than 1%, right?
Yeah, it's less than 1%, but you're not, it's knowing the total load volume in the country, you're going to have a bunch of smaller markets in there. And I think everybody knows that Greensboro is a little smaller than, say, your Charlotte's and Atlanta's. Atlanta's the largest one in the country. But it's good to know how they're moving in relation to everywhere else, because you can see it's a trend right here. You can see that it is well within its normal range about through here. And then all of a sudden the bottom drops out. This is people avoiding going to Greensboro, North Carolina market, which I think everybody expects. But this is a good illustration of how this data works and like in other places. So if you don't know about a giant hurricane coming in, you can check your inbound tender market share map. And when those values are in white or blue, you now have kind of a good idea of what that means overall. And then you go into the market, you can establish the baseline for that market, and you now have some point of reference where you can start making decisions off of it. Now, what does that mean? Well, to me, that means that there's just not a lot of loads going into Greensboro, North Carolina right now, because nobody wants to ship anything over there.
Right.
And now, what it probably also means is that if they are trying to ship there, the carriers are saying, no, we're not going. If you're watching the weather forecast right now, they've kind of changed the forecast for Hurricane Florence to a more southern track. So the Greensboro market is not getting as well, at least at the moment, they're not projecting it to get as hit as hardly as it was before. But now it's, so now maybe you want to take advantage of the situation. And if there are some loads going to Greensboro, you can charge a little bit for them and then go and cover some hurricane loads while you're out there. I don't know. But that being said, I think this gives a good example of not necessarily for a known event like a hurricane. I think everybody expects this to happen. But you can see the average value dropped well below it. You can now, depending on your point of view, shipper, you're now expecting, I'm going to get hit with some higher transportation costs. Broker, I can now charge more going into Greensboro, and carrier, maybe I'm thinking about playing the spot market today, going to Greensboro. Or I know if I'm a load planner, I can't actively plan to get a truck to out of Greensboro right now.
And I think that's interesting too as well. And probably, as we mentioned, most people are going to expect and understand that, all right, North Carolina, that's right where the hurricane's going to hit,
right, into
maybe southern, South Carolina as well. But I think it's important also to understand the process that these hurricanes include when they're hitting, and the staging of product and the surrounding region. So can you kind of go into what our users should be looking for within SONAR? Because I think we can all agree that as you show here with the inbound tender market share, we're probably going to see volume completely drop off into those regions because it's purely it's undrivable conditions for the next
Absolutely,
week.
absolutely. No, and I was clearly just illustrating that one just to show you kind of how sonar works within a scenario where you have an extreme event or a market deviation from normal. Like that's just one example of how to use it. It was just very clear. You can see on the map here, there is a big white space in the middle of North Carolina. And honestly, there's probably over the next few days, probably going to be another one over here in Columbia, South Carolina, because that interstate is only going one direction coming out of Charleston right now. And that's north. And there's a lot of interstate traffic moving in those lanes as well. So to your point, for sonar users, you really can see the surrounding markets and surrounding regions and what's happening in relation to what's going to happen in that area as the hurricane comes on land. The floods start, knocking things over. And then once that kind of comes through and passes, you're going to start to see this trickle down effect within the market. So today we're looking near term. We see that North Carolina, South Carolina, the biggest impacted areas, which is exactly what you'd expect. But over the next 3 to 4 weeks, hopefully this thing kind of calms down a little bit before making land and running over the place. But let's be honest, the odds are that it's probably going to knock down some stuff and people are going to have to rebuild. So the way this works is FEMA has already started contracting a bunch of carriers. And what that means is they've now tapped into that capacity. And that capacity will start coming offline. And you'll see it first in the Southeast, and then it'll start to kind of have this ripple effect through the rest of the country. We saw that last year with Harvey. You really didn't see it. You saw this short-term impact right away, right around Texas, as people started positioning trailers and trucks as they helped with disaster relief. And then all of a sudden in October, a month later, nobody can find a truck again. The truckload market continues to deteriorate throughout the month of October into November. Holiday season kicks off, and we're in another capacity crunch, and everything's kind of gone haywire real fast. So I would think that this year we might have learned something. Again, Harvey hit Houston, which is one of the largest cities of the top 3 or 4.
Yeah, I think it's top 3.
Top 3 or 4 population centers in the United States. A lot of concrete there to overcome. And Wilmington, not necessarily the metro center, but there is a lot of population sitting down here. Charleston, Myrtle Beach, big vacation area. Charlotte obviously is a pretty big center. And I'm just going to click on the Charlotte market to kind of explain, how do I look at this in terms of judging where the biggest weighted or the areas of most importance that I should be focusing on. So Charlotte, I'm going to click on here and I'm going to see, okay, the inbound tender market share in Charlotte is 2.16%. That tells me that Charlotte is a significant inbound market, and something that you can see if you get familiar with the head haul index eventually. The negative value of the head haul index indicates there's a lot more inbound than outbound. So if I'm looking to put a truck in the Charlotte market, for instance, today, it looks like a bad situation. Not a lot of outbound. There's a lot more inbound than outbound. So that's interesting considering what we're about to deal with. Now, some of these places are probably starting to shut down. They're shipping and all that kind of stuff to kind of get in front of this. They don't want a lot of freight on their dock as things come off the line. Charlotte's not a huge industrial center, but it does have some commodities coming out of North Carolina. I think they actually produce a ton of eggs. There's a significant amount of eggs in North Carolina. We had the big salmonella outbreak in the early part of the year. And anyway, there's a lot of stuff that comes out of there, but there's definitely more. It's a consumer market. Charlotte's got a lot of banking, a lot of financial. There's going to be a lot more going in than out typically. But if I'm wanting to get kind of an idea of a market's character, I can just click on that area in the map, and I now have a pretty decent idea of what it's all about. Inbound tender market share is 2.16%, and outbound tender market share, where are you? Outbound tender market share, well, 1.81%. So less outbound than inbound currently. So now you know about Charlotte.
Yeah, and as we as we move through this time and we see more of these FEMA requests and taking up a lot of that capacity, one contest we may have or see is that a lot of that freight is not going to be electronically tendered, and it's going to be more over the phone and via email and kind of on demand. So we may not see it in the electronic tender rejections here. But one thing to note is we are dealing with a somewhat of finite capacity. We're not necessarily injecting 100, 1,000, or 10,000 trucks during times like this. So as we see a need for capacity elsewhere through other means, we will see the fallout from a tender standpoint. And I think that why we've been showing the map the entire time here is this gives you a really good look into what's going to happen and where that fallout's going to be and where we're going to pull capacity from and where we're going to need more capacity, where volume surges we're going to see from our normal contracted freight. So that's, I think, something to note with times like these when we have these events happen that may not be exactly captured, I guess is the right word. But
you're right. This is, and what Brad's getting at is the fact that you're not going to see the direct impact of FEMA having all these carriers use. What you're going to see is this indirect impact where you're not seeing FEMA loads specifically, or even the loads of water or other supplies that they need for disaster relief. You're going to see the fact that the carrier is off on doing these FEMA loads. Mm-hmm. Now he's missing. There's less available to do the regular day-to-day trucking movements, which is exactly what happened last year. You didn't feel it right away. Over time, things kind of built up. A lot of shippers had freight on their docks throughout the month of October. As carriers were off, and let's be honest, the hurricane loads and things dealing with hurricanes pay a lot more money.
Yeah,
that's the bottom line. Is these carriers, but not just the fact that they're making more money, but they are helping the areas significantly. I shouldn't discount that. But there's two things that are really important to think about there, and that's they're helping the areas and they're making more money doing it. Yeah. So that's not many people are going to turn that down. They are running businesses.
Yeah, and I think a good example is what Craig Fuller, our CEO and founder, wrote an article about his days back at Express Direct and US Express for, was it Hurricane? Which hurricane was that? I forget which hurricane it was. It was back in 2002, 2003. But anyways, the point being that it was the point being the hurricane hit in the southeast, and they took trucks from all around the country to Ontario, Canada, to pick up loads crossing the border. Right. So the point being, you may not know you're being affected and how much you're being affected by this, and the reach of an event like this can hit the entire country essentially. So to monitor SONAR is something that is going to be extremely helpful over the next month and a half, and then especially being, truly we're right on the heels again of holiday peak season shipping.
Yeah, and something to note, these are, we call these black swan events because they're basically these unique, unpredictable, unforeseen events that nobody can really tell. It's not part of the normal algorithm of freight movements. So something like this can really disrupt the network. What I would expect to see is over time, these markets will start to heat and light up a lot more often, because when the market is generally stable, you're going to see the country have all very similarly shaded values in the heat map. When the market is more volatile, you're going to start to see things like this pop up a lot more often. You're going to have these dark blues, these lighter whites, as the freight market kind of destabilizes, and the inbound or outbound tender market share, depending on what you're trying to do. And the reason I picked inbound here is because when weather's involved, that tends to make people avoid areas in the near term. The outbound is kind of a good indicator of the regular kind of movements of freight. You're going to figure out where people are having the most loads coming out of. Inbound gives you an idea of where people are avoiding, and that over time indicate that's the first step in figuring out how much capacity may or may not exist in that area. So right now, when you have a lowered inbound value over time, you're going to have more exposure there's not going to be any capacity there because there's just not many trucks finishing their loads there. One of the other indirect impacts of all these FEMAs is a lot of these drivers will now kind of be off the grid as they've been waived on their, all their hours of service. And effectively, you're just not going to see them.
Yeah.
Like they're going to be running their freight all over the place. So again, I plan to see a lot of these white and blues show up as they kind of spread out over time. One of the markets that I wanted to kind of highlight as an area to pay attention to, this hurricane is going to hit right around here, down here in Wilmington, and it's kind of going to take a turn into the interior here for a little bit, and it's supposed to kind of slow down and turn into a big flooding event. Most of the winds will be gone by the time that it gets too far inland, but depending on how long it sits here and spins, you're going to have just flooding rain. I mean, Harvey did something similar by going inland in Houston and then backing back out. So Atlanta's going to be a big staging point for a lot of people. And something that we've seen in Atlanta is this market has been slowly kind of falling out of favor in terms of outbound loads over the past, 2 months. You can see here, I've got the head haul index pulled up, but I should probably just go ahead and start out with a volume chart for Atlanta, just to illustrate what we're talking about here. I'm going to pull out, you can see Atlanta this is the outbound tender volume index, and this is going to, again, be the measure of kind of overall load volume in a place. It's not going to be relative, so it'll be an absolute value, but it is an index. So we've seen this kind of slow decline until this last part of August, where we saw this big push in outbound volume right before Labor Day, which is not unusual. Mm-hmm. We can see that, but sometimes we actually see this thing go up. And I'm going to go ahead and pull up one of our other tools that kind of helps you. I'm going to throw out the trend line here. And you can see that this thing is generally, it's on a pretty good decline, dropping 17.7% over the last half of the summer. And then it shoots back up here. Well, then coming out of the holiday, the volumes just don't pick back up. Big decline in outbound tender volume.
And you drew it to, just for the users, you drew it to that point because the volume, the deep dip there is
this
Labor
is
Day. So
this is the Labor Day effect right here, where you just don't have the amount of loads, over the holiday. So it creates this large hole. You can see it here on July 4th too, but it never really recovers. Mm-hmm. So that to me is kind of like, that makes this kind of a pre-holiday shipping push and not a long run type situation. If you pull up, and I'm going to compare the inbound tender volume, and as you can see, I'm kind of constructing our head haul index. Mm-hmm. Didn't mean to draw that line. Go ahead and just pull these lines back off to kind of declutter our map. And accidentally took off the inbound tender volume. Give me a blue line, draw me a green one. There we go. So inbound tender volume has increased, and I'm going to kind of zoom in. You see these gaps in here? This is basically where, when they kind of overlay each other, that means the market is going to be more stable, have better equilibrium. Your tender rejections are going to go down, as they have over time in Atlanta. And I'll just go ahead and illustrate that here. I'll pull back up the head haul index in a second. So you can see from July on, the tender rejections in Atlanta, outbound tender rejections have been on a steady decline, except for this weird anomalous spike right around Labor Day, which we saw the volume shoot up out of, the early part of
Yep.
or the late part of August. So I'm trying to draw a relationship here between, the discrepancy between outbound volume and inbound volume. And when you have too many loads going out over a period of time, you don't have the capacity in the market to cover all of the freight eventually.
Yeah, and that's a good way to look at that, of course, is the head haul index, which is giving you the difference. So the outbound volume minus the inbound volume, which essentially this is the head haul index almost, but we're viewing the comparison here.
Yeah, we're breaking out the components of the head haul index. So whenever you see something like this, where the outbound exceeds inbound for a period of time, that actually means you're probably going to see some tender rejections, and therefore some upward rate pressure in the market potentially. If it stays up over a long enough time, the one thing that you don't know is how much can that market bear. You've got people willing to deadhead. That's why you don't see this 1-to-1 ratio. You're going to have people that are going to deadhead into a market a lot of times when they feel it's worth their time. And so the interesting thing to me is there's a lot more inbound volume coming into the Atlanta market, whereas outbound volume has kind of stalled out, creating this negative head haul index value. And that's very interesting to me when I look at these markets, because now you have this excess capacity available in Atlanta,
Yeah.
which is the biggest market in the country, according to our market share index. I'll go ahead and pull up the market share. Do you want to?
Yeah. So, and I think also what that can tell you is you see excess capacity with the inbound volume being higher is if you're operating in these regions surrounding Atlanta, that can be something that you need to take note of. And you should probably always take note of if you are operating near these large shipping hubs like Atlanta, Chicago, Los Angeles, Dallas, and Houston. But especially in times like these, and knowing that there's going to be, and there clearly is showing from the data, an increase in the inbound volume there. So to get an outbound load, there may be some deadhead involved there, and you may need to take that into account when heading into that market. And also maybe something from a shipper perspective, if you're in some of those surrounding markets, you may be able to understand that there's some excess capacity for you to buy in those areas.
Right. So I clicked on Savannah real fast. I'm trying to break this down. These are going to be the areas that you want to watch in the near term over the next 1 to 2 weeks. These areas that are in the immediate path of the hurricane or have a direct, relationship with the hurricane, if you will. As this thing moves inland. So the head haul index in Savannah market right now is 34. That means that they have more outbound than inbound, which again is going to expose the Savannah market to capacity issues over time. Therefore, your rates are probably going to go up. And when that happens, that's why it's so interesting to me that people are kind of positioning themselves in the Atlanta market. So it looks like there's going to be a little bit of a capacity swell in Atlanta. And it might be due to the fact that, the shippers just don't have the volume right now. Or conversely, it could be to the fact that they might be kind of getting positioned for the hurricane itself.
Yeah.
As they know that, you got Home Depot right there in Atlanta. A lot of freight moves out of that area, and a lot of them do a lot of stuff for hurricanes. So Atlanta's going to be one that I'm going to be paying a lot of attention to. But not only that, getting out of the region in the longer run, people are going to start focusing in this region alone. I'm actually, if I'm a broker or a carrier at this point, I'm basically looking, well, what do I do with the rest of the country? And how can I best position my fleet if I'm a carrier? I think if you're a carrier, you're talking to FEMA if you can. And if you don't have that kind of situation, you're now going to start trying to figure out, how do I move my assets the most effective way? And the most effective way is going to be in areas where you have lots of outbound tender volume. So first thing I'm going to do is figure out where my outbound activity is going to happen. And as I pull up the outbound tender volume index,
and not to derail what you're about to show, but one thing that came to mind when talking about Atlanta and the increase of inbound freight is to monitor or keep an eye on if you're shipping some of those high volume lanes. For example, Chicago comes to mind, Chicago to Atlanta. I would say look to see some volatility on that lane.
Absolutely.
Going in.
That's a good point.
I'm sure from the Northeast, I mean, some of those may be shut down with the hurricane being right in the path, but I think Chicago, maybe Dallas to Atlanta, going to be an interesting one when you talk about another very large shipping hub in Dallas and positioning freight, like we said, for kind of next day delivery into those hurricane affected areas. So I think those are going to be interesting areas to keep an eye on as well, and be very, very cautious of buying capacity, whether you're a broker, sending trucks into those areas as a carrier and, as a shipper. I think both of the above.
As a shipper, they need to realize that I'm sure they know at this point that their carriers are going to be occupied elsewhere if they're, positioned anywhere close by. But what I wanted to kind of illustrate here is everybody kind of knows that North Carolina is going to be shut off. South Carolina eventually is going to be shut off. Irregardless of all that, I don't even think that's a word. No. I just said irregardless.
It's your webinar.
You can say it. Shakespeare used to make up words. I think I just did too.
Yeah.
The thing I want to look for and I'm going to talk from each perspective. So as a carrier, how do I get my freight moving if I'm not involved with the hurricane relief or anything like that? Chattanooga market would be a great space. You see the head haul index value of 65, indicating a positive market in terms of getting my truck moving out of there. I don't know what's happening in Chattanooga. We live here, but a lot of freight's coming out of there right now. Texarkana got only a head haul index of 5, so it's not necessarily the most stable of places, but over the last week, we've seen a big volume increase come out of there. That's why I pulled this outbound tender volume index weekly change. It's because it's going to tell me over the past 7 days where has had the most, surges in volume. And as capacity kind of falls out of the market and swarms to the East Coast, you're going to see a lot more of these places kind of show up. And I think that even better and more direct, and it's probably not as much of a leading indicator, but your tender rejection index over the last week, over the next few weeks, should actually start showing up as, a pretty decent indicator. So I've got the weekly change pulled up right now. Eventually, this is going to start lighting up with dark blues. As trucks are, dealing with their business over here. You're probably going to see a lot more activity on this thing than we have for the most part of the year. I'm watching markets really out west. This is going to be the converse of the impact in the early spring when produce kind of kicks off. So most of the trucks kind of go to LA and cover all that. Well, now they're going to all swarm out here to Savannah. Savannah and Charleston are going to get the love. Charlotte, Atlanta, these guys are all going to they're all going to have a lot of trucks in their area. The West Coast is now going to be more heavily exposed. If anybody has seen a map of the trucking density in the country, the East Coast typically has a bunch of dots, like thousands of dots just sitting there. And then you have these lines across the interstates going to the West Coast. And then there's a big black dot sitting down here in the Los Angeles, San Diego area. So these areas are going to be left unattended for the most part. So I'm looking at outbound tender rejection index to kind of shoot up in these markets. Ontario, for instance, that's the industrial sector of that market. You've already got a high head haul index of 66, indicating that you definitely have some exposure if there's any kind of volume surging coming out of there. I'm going to look at the Northeast because nobody goes to the Northeast in general. I'm going to look at some of these outlying areas to see if I can take advantage of that if I'm a broker. As a carrier, there's probably going to be some opportunities for you and that you may not even be expecting as everybody's watching this corner of the world. What do I do in the rest of the country doesn't stop moving because a hurricane showed up. So that's kind of the process that I would take. I would look at, would probably look at tender rejections on a weekly change first, because that's going to be your most significant impact as capacity comes off. And then volume, I would look at second. Maybe market share would probably be a good one to look at over the course of the next week. Inbound specifically because the weather, then maybe move it to outbound to see if I can figure out any kind of leading market. The head haul index for each of those cities, click on all of these little markets when you see these colors light up. That'll give you kind of a good way to work through like a kind of a progression of each of these markets. Quincy, for instance, a 9 value head haul index. They've got a large surge of volume. But
I think lane specific as well. We do have our tender rejection lane specific, which sticking with the Atlanta theme, I'm sure you're going to want to, if you match up with some of those destination point Atlantas.
Let's give them an easy one to kind of look at. So outbound tender rejections into Greenville, not exactly the worst right now, but it's probably not a huge lane. Let's go ahead. Oh, did I pick the right one? Yeah. Let's try dot. Let's pick up Charlotte. Let's see what's going on. So see Charlotte. Nobody wants to go to Charlotte right now out of Atlanta.
And our outbound's high, definitely.
Yeah, on the outbound.
And I think,
to Atlanta,
like we mentioned, our rejection percentage, Chicago to Atlanta with destination point in Atlanta. We may not quite be seeing that today. I think over the next week, and 2 weeks monitoring some of these major lanes going into Atlanta is going to be something that you're definitely going to want to do.
Yeah, absolutely. Breaking down each of these lanes is going to be, you know where to start.
Yeah.
Atlanta is going to be the big hub of the area, but I think it's easy to ignore what's happening in the rest of the country. That'll be where the most significant kind of situations are outside of the obvious weather disaster stuff. But this is the time where the Sonar users really can take advantage of the information at hand, because you're going to hear a lot of anecdotal stuff about what's happening out there, and you're going to have your own story. But this is kind of like hard data that's going to be able to validate as you go through your day on the next couple of weeks, because you don't really know where some of these breaking points for each of these markets are. People are positioning right now. They think they know they're going to be able to handle all this freight. They're not really pulling off their routes just yet unless they're going into the Southeast.
Well, there's no telling if we're going to be showing an influx of a couple thousand or tens of thousands of loads over the next month.
We don't know the extent of the damage yet. It takes them weeks to assess damages. Gordon just came through the Gulf, really not a major impact of a storm. This is going to be a lot stronger than Gordon was. Cat 4 right now, I think it's supposed to make landfall as kind of a Cat 2, which is still pretty significant considering the fact that it's going to be a Cat 3, which is generally, they classify that as a major hurricane. Yeah. And any part of that wind field touches the coast, and it just destroys everything that it touches. And, again, then you're going to have the flooding that's actually going to happen further inland. That's going to be more significant. They're supposed to get, I think, as much as 24 inches on the coast there, but you're on the coast, so that's the ocean's not far away. Right. Storm surge is obviously a problem there, but.
And as we're going to transition here into our last section here of the webinar, so just want to throw a quick reminder that if you have questions, I know we're staying pretty specific to the hurricane and how you can monitor and use sonar throughout the next month or so as we feel the effects. So your Q&A here, if you have specific questions on what you can look at or what you should look at, please feel free to ask them up on your little ribbon there under Q&A. And also if you have specific sonar questions, we're more than willing to answer those here at the end of the webinar. And again, any further questions, I know we mentioned on previous webinars, our direct email, sales@freightwaves.com. or you can contact us at our website if you need to request a demo and this is your first time on the webinar, at freightwaves.com/sonar. And we'll go ahead and jump in here to kind of the last part of the webinar and the Sonar Insights, and tell us what we're looking at here with the U.S. Outbound Tender Reject Index.
I was thinking about something just now, and I was thinking, well, a great place to start would actually be in the OTRI USA over the next few weeks. As these things kind of start turning up, you want to start at the highest level and work your way down. If you're not looking at the map, I think that's probably the best place to start. But before you go there, just to see if there's anything real significant in the overall market, I would look at the OTRI USA. And if this thing really starts to shoot up, I know that I've got a lot of situations in the country going on.
Well, we've been on over the last, really since the end of Q2, we've been on quite a decline from tender rejection standpoint, and really seen a little bit of decrease in volume overall in the nation, but not as significant, I don't think, as the low percentage that we're seeing the outbound tender rejection operate at for the entire United States.
I mean, it's as low as it's been all year. Over the last few weeks, we had this little bump in response to the Labor Day and the end of, August. That's pretty standard, but it still wasn't that significant.
No.
And now's the time of year we're seeing this little uptick again, but again, we're not enough data points to say that things are kind of starting to turn up. Kind of seeing what the hurricane does overall might set things off again. We don't know yet. Another place, I think, I've never done that before. I just closed my whole chart.
And I think we wanted to next go through and maybe mention some of the types of shipments that are going to be maybe available, or the types of things to look out for when quoting from different customers in response to this hurricane, and what maybe to expect, just to throw it to a carrier's perspective, in terms of maybe what they should expect or know if they're being affected, or if their freight's being affected by this hurricane. What type of commodities will they be requested or being requested to haul into some of these surrounding areas?
I mean, I think some of the commodities they're going to ask, it's going to be like water, eventually it's going to be a lot of building and construction supply. It'd be interesting to monitor, like Home Depot, obviously a huge involvement in hurricane relief and disaster relief, but you also have Walmart and various other retailers like that. Any kind of basic, I think Pop-Tarts are the number one thing that are provided. So Kellogg's is going to have a lot of shipment activity over the next few weeks, depending on the gravity of the disaster. Anybody that ships waters, I think everybody knows Nestle. It's pretty big. All of these kind of markets in general, where these guys have a lot of warehousing and production facilities, those are going to be the places that take up the most capacity. And that means that the shippers directly around those are going to be the most exposed to capacity constraints. And that's something that you can clearly go on your Google Maps, or most of these people know exactly where, these shipping facilities are, especially if you're located in one of these markets. And they can go to these maps and they can see, like, well, let me just check out where Nestle is today. Right. Or here's Pepsi with their Aquafina.
And if you are some of these shippers, whether you be small and possibly affected by some of the larger shippers in your area, or if you are some of these larger shippers, how should they expect to react, or what are some of the precautions or things that they should do if they're directly affected in terms of shipping, or if they're kind of externally affected by some of the events?
So lead times are going to have to go up if you're a shipper, if you want to guarantee some capacity over the next little bit. So pull up the Tender Lead Time USA just as a starting point. I expect this should go up over the next little bit, as shippers are going to have to know that carriers if you want to secure your freight, you're going to need to expand your lead times quite a bit. That's pretty common sense
Mhm.
to me. In certain of these markets, such as Atlanta, for instance, I would be curious to see just how quickly we see this move. This right here, a lot has to do with the holiday
Right.
in Atlanta, but you see here it's starting to turn up a little bit, and you saw the volume of this area is actually pretty flat.
Right.
So if you're surrounding these areas, it's good to know. Lakeland, for instance, I believe, in that where a lot of water comes out of. Yeah. So Lakeland market, for instance. Oh, I pulled up the O-Tri. But then again, O-Tri, you see how it's kind of moving, and you're going to see tender lead times probably go up across the board, but they're going to be more significant in some of the areas surrounding and where some of these facilities that are kind of providing the disaster relief are.
So I think being proactive is probably the best move that you can make, and certainly monitoring the sonar data and understanding if you potentially are going to be affected when you may think that you're not going to be because you're a St. Louis shipper, for example, or a LA shipper, for example.
No, it's a good idea to just know that this is going to impact the entire country, depending on, especially a lot of these guys have a lot of volumes coming in for the holiday. We've seen a lot of stuff come in from overseas, and they've been sitting in warehouses for a little while. And if they were planning on shipping, here towards the end of September, there may not be a truck available.
Mm-hmm.
These maps are really good at letting you know exactly where some of these where you're going to be the most exposed. And that's why I had the inbound tender market share pulled up first. Let's just go there and it's the change values that are the ones that are going to tell you where you're the most exposed. Obviously right now it's going to be in North Carolina, eventually South Carolina, more than likely. And the discrepancy between the outbound and inbound with the head haul index, that's going to tell you the places that have the highest risk.
Mm-hmm.
And all Sonar really does is provide you kind of this probability.
Mm-hmm.
What are the odds that I'm going to now experience increased rate pressure or decreased rate pressure?
Right.
Where am I most exposed? And you think about it every week when a lot of people play fantasy football and they have these projection numbers, and what everybody does is they go out and they kind of gather all the the matchup information, and that's effectively what we're doing in Sonar. We're trying to figure out where is there a potential mismatch, where can I take advantage, where do I need to make sure that I'm reducing my risk in each of these markets. And whenever it's in trucking, it's far simpler than kind of managing Tom Brady and his matchup potential. It's literally how many trucks do I have in an area versus the amount of loads available in the area. And then of course there's other variables too, such as carrier sentiment and the amount of, if they want to go and make more money, cover their costs in some other area. But that's freight in a nutshell.
Yeah. And are there any other factors contributing to rate volatility that we may want to take a look at if we're a carrier, broker, shipper? I know things like fuel prices are sometimes affected in events like this. So can we speak to, I know we have the data in here, the actual price at the pump per gallon.
We do.
And can we derive any, what can we use this for, and how can this help us potentially?
So as we've got, I don't think necessarily your load planners or anything like that are going to be managing this. You've got your fuel desk and your asset side that are going to be most interested in this particular feature of Sonar. So you've got the average price of fuel, and this is the purchase price of fuel. This isn't the DOE isn't reporting this, over their giant regions that they have that are massive, even though we have that in here too. But this is going to be the average purchased price in each market. So, obviously in hurricane situations, and this is not, it's probably not going to show up yet. Obviously not, as Wilmington they're not price gouging at the pumps yet, because this is, it hasn't had time to act yet. But as we move over the next few weeks, there's tends to be always some sort of scare or something that drives up the price of fuel during these hurricanes. It's not hitting the oil rigs like it did in Houston last year and the pipelines there, but we saw it. The interstates are moving one direction right now. That means that trucks are not getting in. You're going to have shortages eventually. The average price of fuel is probably going to go up in some of these markets, specifically in the Carolinas. So that's just one more feature.
Yeah.
This is exclusive to SONAR.
Yeah.
That you can use to kind of see, well, am I going to pay too much?
Yeah, exactly.
In an area.
And I think in the fallout as well. So maybe not this week, but in 2, 3, 4 weeks.
We're a little early.
Ways away. But another contributing factor when you talk about maybe you're quoting a 100, 200, 500 load project and something that, as I'm sure you definitely take into account, but to see the real-time prices here at the gallon in those regions may be something that you want to monitor, as well as this is also part of the fallout from some of these black swan events. We'll see.
Yeah, no, and this is a good feature to look at in general. I think a lot of it, we haven't talked about it that much, but it's a decent feature to look at in each market too, because as supply kind of dwindles or the price goes up, it's going to impact certain markets differently. And that's unique to us. Like, we can kind of isolate it a little bit more cleanly. I know a lot of these fuel desks have, their ideas of where to go and whatnot, but there's going to be little market anomalies here and there that people are just not going to know about.
Definitely.
You make the decision.
And I think that's going to pretty much, we're about good on time here. So I think we're going to get ready to close down here. Unless we have any questions here, we're going to leave it open here for the last 5 minutes for any questions. We have not gotten any so far. Again, the QA section on your top part of your screen there is where you can ask questions. If you'd like to do it offline, sales@freightwaves.com, or again, contact us on the website if you would like to request a demo at freightwaves.com/sonar. And again, myself, Brad Ganane, and one of my coworkers, Tim Brownell, will be in Long Beach, California this upcoming week, Sunday through Tuesday, getting as far away from the hurricane as we can. We'll be at the IANA Expo, so if any of you or members of your company will be there, we'd love to meet with you and say hello. So we will be available, so please reach out if you're going to be there. And we're going to just sit here for a little bit, next few minutes, in case we have any questions come in. And I don't know if you have anything else to add here as we shut down, Zach, but if you do, please go ahead.
No, I think we're good. I think we summed up the hurricane package as well as we possibly can at this point.
Hurricane package part 1.
Yeah, right. In the coming weeks, it'll be interesting to watch some of these markets as they change and move.
Definitely.
Yeah, and good luck to anybody that has anything to do with that region.
And be careful if you're operating in those regions. And we do have one question regarding the data. If we provide some kind of API that allows users to consume raw data, we do have that capability. Again, I know we don't touch on all of the SONAR aspects, but SONAR is a SaaS based platform, and that is one of the abilities that you have. If you're a SONAR subscriber or user, it is one of the packages that we do have available. As Zach navigates to our SONAR screen, we actually have an API simulator, so you can actually you could see what the data would look like as we click on some of these data points. You can see how it would be input into your system. If you understand code, that may mean something to you. It means nothing to me, but yes, you can certainly do so. It is part of some of the packages we offer to our subscribers. And I think that's it. We'll hang around for a few more minutes here. If we don't have any more questions, thank you guys again for attending. Be careful out there. Good luck, and we will talk to you next week for our weekly Market Insights webinar. Thanks again.